if you're buying or selling, is markets, right, at a structure level. STRUCTURE is the market at a structure level. That's something that you can ask. 2, is market trading with the trend? That's another thing you can ask. 3, right, is the market structure, STRUCT, is the market structure in your favor, right? And then you can continue, based on your strategy, you can continue to build out this confirmation checklist. So as an example, if I look at this trade over here, mind you, we haven't traded it. We haven't used our strategy. We're just talking about the first thing that traders typically need. And that's an analysis, because there's 2 things. They need an analysis, and then they need an entry. And that's what we're going to talk about. So let's talk about the analysis first, right? Confluence-based tradings help you build up, your confirmations to increase the probability of the market going in your direction. And you can start combining this with your strategy. So let's talk about this, right? Let's look at this. If this market is giving us a sell, right, this entire harmonic pattern is actually an analysis, right? This harmonic scanner is an analysis. So that's one confirmation. What's the second confirmation? The second confirmation is that this market is in fact at a resistance level, right over here. This is in fact at a resistance level. So being that it's at a resistance level, that's another probability that the market may start coming down. That's another confirmation. Another confirmation is that the market is continuing to make lower lows. You see these high points right here in the market. Let's talk about this really quickly, right? This is continuing, pardon me, let's move this line out right over here. And mind you, this is just base education. Nothing crazy, base education that you want to keep in mind, right? As you see here, the market is trading below these highs. So the market is still, in fact, downtrending, okay? So you could be at a support in a downtrend. No, you want to be at a resistance in a downtrend, okay? So there's another confirmation. Another confirmation is, let's say, trend lines are very subjective, but let's say you was drawing up a trend line in the market. Now there's clearly okay, well look, we can actually kind of use this a bit, right? This is not actual, but let's say we use something like this, right? No, we can't use this at all. But as an example, let's take a look. 1, 2, 3. You see how this market started trading along that little trend line? Are there trend lines? Trend lines help traders. You don't have to use them, but these are different things that you could create an analysis with your eyes. So you want to create an analysis and you want to increase the probability of the trades going in your direction, right? So let's remove all of these drawing tools. Let's come back over here, okay? So when we go to step 3 about identifying the confirmation candle, I'm going to talk about this one more time. There are 2 things that a trader needs. A trader needs an analysis. An analysis is a market bias. What direction do you think that market's going to go in? Now, once you develop an analysis, even if you have a particular strategy, you could be trading any strategy in the company. Every strategy starts off with an analysis. That analysis that educator is building is giving that educator confidence, or telling the educator that, hey, we're looking for the market to either go in this direction or we're looking for it to go in this direction. Okay, I want you guys to understand that. Now, after the analysis comes the entry. You see, I've learned in my trading career that the actual, give me 1 second. Honey, I'm doing Master of the Academy. Is there an emergency? Because I'm on Chris Terry's banner. It's Christopher Terry's banner. It's on the Market Mastery. You go to Go Live, you scroll to the bottom, you click on Market Mastery. It's not on my channel. It's okay. Bye-bye. Alrighty? So that's one thing. Okay? That's one thing. Now the second thing that the trader, that's what I've learned, is that one, I look for the analysis, The second thing I look for is I look for the entry, right? This is where our strategy is so unique, because with the scanner source, the strategy that I'm about to cheat you to, I'm not going to introduce you to the harmonic scanner. You guys may know what the harmonic scanner is already, right? You may know, right? So we can look over here because this looks like it's actually setting up. So you may know what the harmonic scanner already is. It's a very popular tool. But what you may not know is you may not know how to identify which of these patterns are good to take. Okay? So as we come back over here, this is what our strategy focuses on. Our strategy focuses on identifying what we call a confirmation candle. You see, the confirmation candle is one candle that we identify in the market that lets us know, okay, the market is trading in our direction and the market is ready to be traded in our direction. Have you ever heard of the right place at the wrong time? Have you ever heard that? The right place at the wrong time? I'm going to give you guys an example. Let's say you guys were looking at the market, right? Let's these are some of the trade examples, right? Let's take a look at US 30 for 1 minute, right? Let's take a look at US 30 for 1 minute. We're not trading it. I want to show you guys an example. Right place at the wrong time. What do I mean? Right place at the wrong time. Let's say you were looking to trade in the market, and then you were looking right over here in the market, and you're saying, okay, the market is making, series of highs and lows. The market looks like it's trading in a downtrend. Nobody really uses trends with US 30 too much, right? The market looks like it's trading in a downtrend, and then you want to sell in the market, right? Let's say the market comes right back over here, and then you want to sell because you're like, you know what, the market's going to keep going down. And then you know what? You are right about your analysis, right? I got to open up your mind. You might have been right about your analysis, right? Right? It did go down. It did go down, but you was at the right place at the wrong time because that was not the right time for that market to go down. That market started going up first, and then the market came down. Has that ever happened to anybody? Because that's what we're going to officially stop today. How many of you guys have looked at a trade and you wanted to get in that trade? You was like, man, I knew I was right. I knew that market was going to go down. I knew that market was going to go up, but you got caught in the pullback. You was at the right place at the wrong time. You had the right analysis, but you had the wrong entry. How has that happened to you? If that has happened to you, I want you to type a me in the chat box. I want you to type me in the chat box, right? If that has happened to you, it happens all the time. Even when you're trading along with educators, even when you're learning strategies, it happens to the best of us. So when I was trading in the harmonic scanner, there were some times that I was trading on the scanner and I was at the right place at the wrong time. Maybe the scanner was at the right place at the wrong time. So I learned that after you build the analysis, right? After you build the analysis, then you look for the confirmation candle. Family, this confirmation candle that I'm going to introduce you guys to is going to change the game for you. It's going to make sure that you are at the right place at the right time. And if you are, then you get to go to step 4, which is then entering the trade. You see, we have a confirmation candle and then we have an entry candle. So you're going to know, here's your analysis, here's my confirmation candle, and here is my zone to enter. You're going to know exactly when to enter the market. And once you enter the market, then we're going to show you how to set your risk to reward. And that's how we do it on my channel. This is how we help people be at the right place at the right time. And then we teach you all about risk to reward, how to properly have risk management, grow your account, and then how to manage your trades. All of that stuff, which we would teach you on another session or following up our education. So with that being said, let's get into the actual steps of learning how to trade our strategy. Okay? So first off, what I'm going to show you guys is this, right? I have 7 technical analysis for the scanner. 7 technical analysis. These are 7 different ways to help you confirm the analysis on the market. That's the very, very first thing, right? We have 7 popular strategies known as the Harmonic X strategy. We have the Harmonic Teacup strategy. Shout out to Lou. We have the Harmonic Pullback strategy. Shout out to Mr. Christopher Derrick, right? Let me actually cover these really quickly, okay? So whenever you pop open the Harmonic scanner, right, when you're looking at the scanner, I don't want you guys to look at the scanner or even, just look at the market blindly. When you look at the market, I want you to learn how to start setting up analysis in the market before we get to the confirmation, before we slap on that confirmation candle. I want you guys to learn about different ways that we use it. You see, this is why we have such an incredible track record on Go Live and why so many people win. Let's break it down this. First thing is that we have the Harmonic scanner analysis, right? This alone is a high probable trade. This scanner algorithm alone is a high probability trade. The second thing is that we have strategies, right? We have strategies overlaid. We have strategies overlaid on the scanner. I think I spelled that all wrong, right? STRATEGY. Don't judge me. I can't think, type, talk, and text, right? STRATEGY, right? We have strategies overlay on the scanner, right? So this is something else that helps you increase the probability of the trade. And then 3, we have our entry technique, right? We have our entry technique, TECHNIQUE. We have our entry technique, which is the scanner source. So you see, we use all 3 of these together to build out these really, really good trades, right? So as an example, one confirmation is that there is a scanner there's a Harmonic scanner setup right here. Boom. Okay, there's a scanner. You could take these and, they're going to be a hit or miss, right? Now, next thing that we have is we have overlays. Overlays is where we're building an analysis around the scanner, okay? Where we're building an analysis around the scanner. So here's one analysis. One analysis, I'm going to briefly go through this because I want to teach you the scanner source, is the Harmonic X strategy, right? That's when the Harmonic scanner meets a confluence point. So what we do here is we look for points where there is resistance and trends intersecting at the entry. That helps us build an analysis. Another really good strategy overlay is the Harmonic Cup strategy. This is where the Harmonic scanner and the teacup strategy is both aligning at the same point. This helps us overlay a strategy on the scanner. Next one that we have is the Harmonic Pullback strategy. Shout out to Chris Derrick. This is where we basically look for what's known as a breakout and retest using the Harmonic scanner. We see support, breakout, retest. There goes the entry. There goes another strategy overlay, right? This one, this is shout out to my guy Holy Pips on Go Cup, right? Then we have the Harmonic Trap strategy. The Harmonic Trap strategy, shout out to Christopher Derrick, is another strategy overlay where we see consolidation with a break and retest at the entry. There's another overlay. Another overlay is using the multi-fire or the triple fire strategy. This is using divergence, using the oscillators to find divergences, right, on the strategy. Another one is the Harmonic Wave strategy. This is where we're looking for trending markets using the Fibonacci. We're looking for pullbacks to the 618 and pullbacks to the 38.2 in a trending market with the Harmonic scanner. That's another overlay. And then one more overlay that we have, shout out to Oren Wright, is the Harmonic Shoulder strategy. This is where the Harmonic scanner is giving us a head and shoulders pattern, right? So these are all different overlays that's in the market. Okay, these are all different overlays that are in the market. So let's come over here to the Harmonic scanner. So as I'm going through the Harmonic scanner, what I'm looking for before entering the market is I'm looking for very simple strategy overlays at first, right? Here is an example. Let's take a look at this CAD JPY. The average trader, we could take something like this and look, and then boom, we could try to draw up over here, right? Boom, here goes a pretty decent example. Us using a trend in the market. Now, aside from us using a trend, we can come over here and then we can say, okay, well, here's the entry. Let's highlight the entry right over here and look at the entry point, right? Look at that entry point right over there. We're also having a break and retest. So you see, if we look in the market, this harmonic scanner was quickly by the trend and it was also by a resistance, right? There goes the support, pardon me, and now it's the resistance, right? So these help us doing very basic stuff like this. Again, this is not the strategy that I want to teach you today. This is me introducing you to different ways that you can build an analysis if you need more confirmation. I just want you guys to see it. Let's go to USDJPY. Right? We come to USDJPY. If we take a look over here, we can look at this market and we can say, oh, okay, well, look, this market is teacupping, right? This market is giving us a teacup. The market pulled back, created a high, and pulled back, giving us a teacup. It could potentially drop. More analysis. Let's come over here to Euro odd, right? Look at Euro odd. We have more simple resistance right over here on the scanner. Boom. Look at that. There goes the resistance. The market's trading into that resistance. So you see, we use very simple technical analysis to make sure that we're building. And this is at a very, very basic level. Now, what I'm really going to show you guys today is I'm going to jump into now how to, right? Let's get rid of this. Let's get rid of this. Now what I'm going to do is I'm going to show you guys, I'm going to introduce you guys, I'm going to give you guys a very thorough lesson today on our scanner source strategy. Our scanner source strategy right over here is when the harmonic scanner, or we'll say the harmonic scanner, when the harmonic scanner lines up with our source indicators, okay? We have a very simple strategy, a very, very simple 1, 2, 3, 4, 5. There we go. We have a 5-step entry technique. Not only will this help you with the harmonic scanner, but this will help you with any strategy that you're trading in the company. And when I say any, I've gotten the feedback. I've seen traders use this with Gold Cup, with US 30, with Teacups, with DeLorean, with Steady, with levels. I've seen so many different people come back to me and say, hey, I use the scanner source on this product. Can you do a collab with this educator? Can you do a collab with that educator? I don't do it, but it makes me proud to see that people are using this strategy to strengthen their confidence in the market. So we're going to dive very, very, very deep into how to identify this entry technique. Okay, this is the moment that you guys have been using for, that you guys have been waiting for. Okay, so let's start this off by getting into this. So what I'm going to do is I'm going to show you on the PDF, and then we're going to go over to the live market. We're going to look at some examples, and then I'm going to give you guys really, really, really good examples. So first off, it's important to understand, you guys are going to get it here first, the scanner strategy indicators, okay? This is built on 1, 2, 3, 4, 5, 6 different indicators, okay? It's actually 5 indicators, but you're going to be using the Hikinashi candles for this, okay? So I'm going to get into these, and you can learn about these settings on another day or watch our strategy video, but we're going to get into this. Now, when we're looking at the market, step 1, the first thing that you want to do, right, is step 1 is you want to see if price is hitting our DC channels, much like a Bollinger Band, right? I'm going to start going a little faster. So let's come over here. Let's open up the McGinley dynamic. Oh, not that one. Let's open up the DC channel right over here. Okay? The first thing that you want to look for is you see this DC channel. These DC channels act a lot like a Bollinger Band. They are a way to help you measure volatility within the market. But not only help you measure volatility, it also helps you measure deviation. I want you guys to understand the psychology. I don't like to just build out, traders that are like, oh, you just do this and this wins. I want you guys to understand what you're doing. this helps you not only build, but help you measure volatility, but helps you measure deviation. What is deviation? Deviation is something like this. Let's say something is high or something is low, right? There is an equilibrium. There is a middle point. Price is always going to trade back to the equilibrium, okay? What goes up in the sky must eventually come back down, right? And what goes down must eventually go back up. It's the law of physics, and it's also present in the market. The market will never go in one direction forever. It may go and go and go and go and go and go and go as you see, but eventually the market is going to need to take a break and pull back in the market, right? There is always an equilibrium in the market, right? Eventually, price is going to need to balance in the market. So it's always going to look to come back to a balance point in the market, okay? So the deviation means how far off of the equilibrium has it went, right? Does it sound like rocket scientists? I don't know, maybe. This is the point where I realize I'm too complicated sometimes, right? But it's just the understanding, right? So if you look at the Bollinger Band, the DC channel, it's set to 50. So whenever it comes to the blue band, right, if the rest of the indicators are present, the blue band gives you a confirmation to buy back up, okay? And then the red band gives you a confirmation to sell back down. So I like to see a big deviation. I like to see an only trade when the market is for a sell at the red band or at the blue for a buy, because it lets me know that the market could have a nice snap. It lets me know, okay, I can get a nice snap off that level. You see how the market is snapping and whipping right off of these red and blue levels? They're almost like floating support and resistances, okay? So we're going to zoom in. So you see how this here is at that red band. So that red band at the entry is kind of like our confirmation to sell, okay? Now, let's come back over here. The second thing that we look for, so step one is price hitting the DC channel, okay? Now, the second confirmation, now this is the most important confirmation. The second confirmation is when using the Hikinashi candles, right? You want the candle to close crossing the 4 McGinley. And it has to have a flat bottom in a buy, and it has to have a flat top in a sell, okay? And it has to close crossing that 4 McGinley. So let's come back over to the scanner. Let's open up our 4 McGinley. Now, the McGinley is a lot like an EMA, right? The DC is like a Bollinger Band, but for me, it's better. The McGinley is like an EMA, but for me, it's better. The McGinley dynamic has less whipsaws. It rides closer to price. It gives you a more accurate and an early reading on price. So we're going to come in here and we're going to look. This blue band right over here is the 4 McGinley dynamic. Okay, that is the thickest. This is the 4 McGinley dynamic. Now, if I'm going to be trading in this market, what I want is in a selling opportunity, let's look at these Hikinashi candles, right? There are regular candles, which is over here, and regular candles get traders very confused because they see red, they see blue, and they're just very unsure what the market is doing. But when you use the Hikinashi candle, the Hikinashi does two things for you. One, it gives you peace of mind because it reads the market a lot more clear. If it's in a downtrending direction, it's going to be all red. If it's uptrending, it's going to be all blue. So it gives you peace of mind and more clarity when looking at the market. The second thing that this Hikinashi does is that the Hikinashi is actually a trend indicator. A lot of Japanese traders use the Hikinashi candles with the Ichimoku cloud. It's like 90% of people, I believe in Tokyo, like use that kind of strategy to trade in the market, supposedly, right? So whenever you're looking at the Hikinashi is usually a true trend after 3 to 5 candles in your direction. So if you see 3 to 5 consistent Hikinashi candles, that's usually a confirmation. But we're not going to be using that in this example. Okay? We're not going to be using that in this example. We're going to be using the Hikinashi to tell us one thing. Now let's come back to this 4 McGinley, okay? And we're going to get really spicy because I'm going to start pulling out the tricks once I'm done explaining the strategy for you guys over here, okay? So when we see in a selling direction, look at the Hikinashi candles. We want to find a candle that has a flat top. You see this flat top candle right over here? Let's make this yellow. This is what's going to help us identify our confirmation candle. Let's look at these red candles. Look at this. 1, 2, 3, 4 red candles. You see how all these blue candles are above the 4? That's letting us know that the market's not ready to go in our direction. But when we see a candle, a red candle in a sell with a flat top, that flat top is helping us understand that there is a lot of strength in this trade. There's a lot of strength, right? It cannot have a wick. It has to be a flat top red candle that is closing below the 4 McGinley. So you see how this is the McGinley, the blue line? You see how this candle had a flat top and it closed before. This is where the candle closed. It closed below the McGinley, right over there. Right? You see that? So it has a flat top and it closed before the McGinley. This is the very, very first step to identify what we call the confirmation candle. This is major. The reason why this is so important is because this is going to let you know that there's going to be a lot of momentum that's going to push this market in your favor right away within the next 2 to 3 candles. So that way you can get right into profit. Okay? So that's the second confirmation. Now, in a selling example, we're looking for a red candle to close below the 4 with a flat top. In a buy example, you're looking for a blue candle. You see the flat bottom? Blue candle, flat bottom, closing above the 4. So you see the difference? This is a flat bottom blue candle closing above the 4. And in a sell model, we're looking for a red flat top closing below the 4. Okay? So that's the second confirmation. All right? Now, let's come back to the strategy. So now once we find that, the only thing that we want to do now is we want the rest of our indicators to be in our favor. That's it, right? So the third candle is looking at our stotch. We want to make sure that the stotch is also pointing in our direction and the stotch is in our favor. It's all color coordinated, right? So let's come back over here. We're going to open up the indicators now, right? So let's take a look at the stotch. Okay, let's take a look at the stotch, right? Let's take a look at the stotch. Okay, let's take a look at the stotch. What I'm going to do is I'm going to draw a vertical line to identify our confirmation candle. Remember, we have not got to the advanced stuff yet. This is still the easy stuff, right? This is the simple stuff right over here, right? So boom, I've identified our confirmation candle. It was coming off the red channel. We have a red flat top candle, red flat top Hikinashi candle closing below the 4. We highlighted that confirmation candle. Now I'm going to draw a straight line on the next indicator, which is the stotch. For the stotch, we simply want the red to be above the blue. You see, when the red is above the blue, right, this means that the sellers are now in control of this trade. So as long as the red is above the blue, this means that the sellers are in control of the trade and the trade is going to be going in our favor. Now, the next indicator that we're looking for, as seen over here, is we want the awesome oscillator. We want the momentum bar to also be in our favor. Very, very simple. We want the momentum bar to be in our favor, right? Let's come back over here. Okay, if this is a market, if this is a bear market, we have red channel, red candle, red stotch, again, everything is color coordinated. We want a red awesome bar as well. See how we have that awesome bar in red right over here? This also means that the sellers are also in control with us, right? Boom. So there goes your red on the stotch. Here goes your red bar on the awesome. So we have sellers, 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 sellers. And now last but not least is, again, looking at the DMI. Shout out to Delano. Looking at this DMI right down here, we want to make sure that the sellers or the buyers, depending on what direction, are also in control. So we want to simply make sure that the DMI is in our favor. Okay? So let's do it. I'm sorry, but can you explain where I can find the recording? I'm going to show you guys everything after. Okay? Now, coming over here. Now we're going to come down to the scanners, to the DMI. So, with the DMI, you have two things to read and two things to understand. Okay? First thing is that, again, you want sellers to be in control. What does that mean? Right? That simply means that if you are selling, you want the red line. You see there's a blue and a red line? The blue line is the buyers, and the red line is the sellers. So if you are looking for a buy, you want the blue above the red. If you want a sell, you want the red above the blue, right? Now you're also going to see that there's this black bar right over here. This black bar is known as the control bar, okay? It's known as the control bar. So if the buyers are in control or if the sellers are in control, you want to know, okay, are they a little in control or are they a lot in control? You want the sellers to be a lot in control, right? That sounds literally incorrect, right? But you want the sellers to be heavily in control. So this is why when we look at the DMI, let's look at the DMI. We're going to put this on 40, right? You want, if the sellers are in control, if the red is above the blue, you want the black bar, you want the black line to be above the 40 level, okay? So you want the black control bar to be above the 40 level to take the trade, okay? That is very, very, very important, okay? So now this is a 30-minute time frame. Let's drop this down to 15, okay? And if we look at 15, okay, perfect. We are actually right here on the money. Now, if we look at the 15-minute time frame, I want you guys to take a look. Let's look at how we've identified our confirmation candle. One more time, right? It looks like a lot, but it's really not a lot. You want price to be reacting off the red DC channel, 1. 2, you want a red flat top candle to be closing below the 4. And then everything else you want red. You want the red over the blue on the stotch. You want the red bars on the awesome. And you want the red over the blue on the DMI with the black line going above the 40. Okay? So let's narrow this down right over here. Okay? Let's narrow that down over there. Okay? Now, once you have all of these confirmations lined up in a row, it's like binary for Forex. Once you have all of these confirmations lined up into a row, you have officially, successfully identified the confirmation candle in the market. Bingo. You've identified the confirmation candle. Once you've identified this confirmation candle, this gives you absolute, and when I say absolute, I mean this gives you absolute certainty. It gives you absolute confidence that this is a very high probable trade for the market to trade in your direction. Because now, let's go back to the steps. Remember, step 1 is we're finding a harmonic pattern. Step 2 is we're determining if it's a buy or sell. We're using a technical analysis. So we're putting some support, some resistance. We're looking for market direction, right? Very easy stuff that you could do without the scanner. Step 3 is you want to identify the confirmation candle. Now that you've identified the confirmation candle, you know that not only is this market looking like a sell market or looking like a buy market, but you're also identifying the exact entry. Like, okay, this is a buy, this is a sell, and it is going to be a buy or a sell right now, not later, right now, with this confirmation candle. And on the close, I repeat, at the close of this confirmation candle, we then get to take the trade on the entry candle. Now, this is going to be the best, okay? This is going to be the best. Let's come back over to the scanner, right? Let's get rid of this, okay? Bingo. Okay? So, boom. Here goes the confirmation candle. Now that we've identified the confirmation candle, the close of the confirmation candle, the very, very next candle right over here, okay, let's make this blue since this is our entry candle. The close of the confirmation candle, the very next candle is known as the entry candle. This is the candle that you can jump in the markets, okay? This is the candle that you can take the trade. This is the candle that you're like, okay, market, let's go. Let's go in my favor. This is it right here. This is the entry candle. And now I'm going to teach you guys a technique I have not taught, not even on my channel. I'm going to give you a couple of examples on how to look at the confirmation candle. And then I'm going to give you guys some extra tips. Some extra tips. And you guys are going to like that. All right? So again, we've identified the confirmation. And then once we've identified the confirmation candle, okay, now we get to enter the trade on the entry candle. Okay? So the entry candle, let's come over here. Right? Let's actually put this out right over here. Okay? This trade right here is where you get into the market. And then if you got in on this trade, right, this would have instantly put you in. And mind you, this is a very short trade right now, but that would have instantly put you in 12 pips of profit right then and there. Okay? Right then and there. So before I teach you more tips on the entry candle, let's look at more confirmation candles. Let's come to USD JPY and let's make sure we're on the Hikinashi. Okay, perfect. Let's look over here, USD JPY. You see USD JPY is not yet ready. Where is the confirmation candle? There is no reason to look at the indicators. For what? There's no reason to look at the indicators because, look, we do not have a confirmation candle. We need a red flat top closing below the 4 to find the confirmation. So no confirmation candle. I'm going to put this here. No confirmation candle means no trade entry. Very, very simple, okay? No confirmation candle, no trade entry. That's it, right? And once you guys, look, you guys are going to find out what I found out. Once you guys learn the scanner source technique, let me tell you, it's going to be next to impossible to trade without it. It is that good. It is that good. Every strategy, everything that you do, this is going to help you find that one pinpoint candle that's going to get the market to go in your direction. And you're going to see, watch, not just on the scanner, but on anything. So let's keep going. Euro odd. Let's take a look at Euro odd right over here. Euro odd 13-minute, right? What are we looking for? What are we looking for? Watch this, Euro odd. We're looking for price to come off the red channel, which it's at the red channel. We're looking for that red flat top candle that goes the flat top candle that is closing below the 4. Bingo! There goes confirmation candle. There goes our confirmation candle. Once we've identified the confirmation candle, we now want to line up the other indicators. Okay, this is where we want to line up the other indicators. So what I'm going to do is I'm going to reduce the time frame. Let's come to the 15-minute. All right, boom. There goes our confirmation candle. Right over there. Red flat top, closing below the 4. I'm going to open up the indicators, and I'm going to draw a vertical line down. Remember, I'm still not on the advanced stuff. Boom. Confirmation candle. red over the blue, sellers in control, red bar on the awesome, sellers in control, and then now we come right over here to the DMI, and then we look for the red over the blue. But lo and behold, check it out. Lo and behold, what happened over here? Look, red over the blue, but is the black bar above the 40? Let's take a look. Let's take a look. And this is why we continuously reduce the time frame on a good trade. As you see here, this black bar is not above the 40. You see? This black bar is not above the 40, but I can guarantee you, this is why every time we do the analysis, I always come to the chart and I reduce it down to the 5 minutes to find that pinpoint entry. That's one of the advanced techniques. Okay, so a lot of times you'll see it on the scanner, sometimes it won't, but this will help you weed out the bad trades. Okay, so in this example, the black bar is not above the 40, so we would not have taken the trade. But if we was able to reduce this time frame to a 5 minute, and this black bar was above the this black bar was above the 40, we would have been able to take this trade. So in this example, if you got in, remember the close of the confirmation candle, the opening of the next candle is the entry candle. This would have been your entry candle right over there. It's always 50%. And then from here, you would have instantly been able to get over 36 pips, taking you to the very next TP. Let's look at more examples, right? Let's look at more examples. Okay? This is a very interesting trade over here. This is a very, very good way as well to help traders. Let's come down to the 15. Okay? Now, when you're over here, again, let's put this black bar. Let's look for this black bar above the 40. I have not gone over the advanced tips yet. Remember, we're still just looking for our confirmations. Okay? We're still just looking for our confirmations. Okay? Now look at this example. This is a very interesting one. This is going to tie into our advanced techniques, which I don't want to show yet. So we'll come back to this one. Let's take a look at Euro USD bat pattern, another one. Let's put this on the 15 minute. Okay, here goes the 15 minute. Let's put that DMI at 40 real quick. Okay, now let's look. Man, I really need the 5 minute on the scanner over here. Okay, you look for that flat top red candle closing below the 4. And once you find that, one more time, this is another one that we have to jump down to a 5 minute time frame to get the entry. But let's take a look. Boom, boom, boom. Let me see if I could do it on this. I don't know. Yeah, it doesn't let me adjust the time frame. All right. Something that's really cool about this is that you can set the style. You see the resolution? You can set it on a different time frame. So if you're on the 15 minute, which is really fun, which I wish we could do over here, but if you're on the 15 minute on TradingView, okay, if you're on the 15 minute on TradingView, you can have the DMI set to the 5 minute, which gives you those really, really good early readings. But that's something else that we'll come back to another day. Now, boom. Flat top, red candle closing below the 4. Red above the blue, red above the blue, red above the blue. We actually need the buyers over the 40. But if you got into this trade, remember, that's the confirmation candle, and the entry candle is at the close. Remember, when the confirmation candle closes, you enter the opening of the very next candle. And if you got in that trade from there to there, that next candle would have brought you down about 12 pips. But if you stood in the trade, you would have been about 13 pips in profit on that trade. Let's check out NU. Right? Here's NU. Here goes another trade. Right? Now, I hope you guys are getting the point. Are you guys getting the point? Because I want to jump into the advanced techniques. Okay? I want you guys to get the point. Let's look over here. Let's look over here. Okay, is the scanner source entry technique making sense to you guys? Is it making sense to anybody so far? Is it making sense to anyone? Okay, if it's making a sense, just type a 1 in the chat box because I want to show you guys some advanced techniques on this. Let's do it one more time. Okay, let's look. Let's look some more. Again, this is a buy example. What do we need? We need a blue candle, right? In a buy example, we need a blue candle giving us a flat bottom closing above the 4 McGinley. Okay? Blue flat bottom closing above the 4 McGinley. That's the confirmation candle. But remember, before you enter the trade, you need to make sure that the rest of the indicators are lining up. Right? Boom. We have the blue above the red. We have blue bars on the awesome, and then when we come down to the DMI, we need the blue above the red. But look, not yet ready. So what do? We got to mosey this on over. We got to mosey this all the way over. Right? We got to mosey this all the way over. So this would have been your actual entry right here in the market. Right? There goes your actual confirmation candle. See how the buyers are in control? We have a blue bar, blue above the red, and the price is above the 4 McGinley. There goes your blue. The next candle is your entry candle. There goes your entry candle right over here. This entry candle would have let you enter in the market, and once you entered in that entry candle, boom, that would have brought you into instant profits. Now, mind you, this went into profits. This went into a little bit of drawdown, 6 pips, and then continued to go in your direction and smack that TP1 for a little over, for about 24, 25 pips. Right over there. There goes TP1. Boom. So I want you guys to see, as you use this more and more and more, you're going to see that when you find this confirmation, this is going to get you in those exact moments that market starts going into your direction. Okay? Now I'm going to give you the advanced tips. Okay? Let's look at one more example. Boom, here goes the blue bar. Let's take a look. We have a flat bottom closing above the 4. Here goes a flat bottom, confirmation candle. Flat bottom closing above the 4. We have the blue above the red. We have the blue bars here. And then we have the buyers in control on the DMI with the DMI getting ready to cross the 40. Right over there. Boom. Right, there goes your confirmation candle. See how that DMI is crossing above that 40? You find the confirmation candle. Last example. The open of the next candle is your entry candle. Right over there. There goes your entry candle. You've identified your entry candle, and look what ends up happening. Market goes right into your favor. Oh, this is gold. So right over there, you already have 33 points, right? 330 pips, however it is that you guys want to call it, right? 330 points in the market, or 33 pips if it's times 10 for silver. Boom, there you go. Instant profits, right? So this is the amazing thing about the scanner source, family. That's the amazing thing. Let's remove all drawings. That's the amazing thing about this scanner source. Again, it's going to help you pinpoint that entry candle that you need to find to have the market go in your direction. Now, what I want to do, I know you guys really thugged it out with me for the last hour. I'm going to be here for another 30 more minutes. And what I'm going to do now is I'm going to give you guys advanced tips. These advanced tips are going to help you master the scanner source. So if this is your very, very first time learning about the scanner source strategy, what you guys can do, if you guys want to learn more about this strategy, when you guys go to Go Live, before I give you guys the advanced tips, when you guys go to Go Live, go down to Forex Harmonics. You guys can find me on Forex Harmonics. I trade New York session Tuesdays and Wednesdays at 8 a.m. Eastern Standard Time. and 10 a.m. on Thursdays. You guys can click my banner, and on my banner, come here to where it says favorite sessions. When you guys click on favorite sessions, you guys are going to look for core strategy number 2. Core strategy number 2, scanner source. This core strategy number 2 is going to teach you this strategy all over again in depth, clean and clear. And it's really going to help you take your trading with the scanner source to the next level. Okay? I traded every single day on Go Live, and I have a great track record. This is going to teach it to you guys right over here. But what I'm going to show you as an exclusive on today's Market Mastery now is how to really get some advanced tips for trading the scanner source. So what I'm going to do is we're going to come over here to the market, right? We're going to come over here to the market. So these are some of the trades that we caught this week. I'm gonna remove all these drawing tools, okay? And I'm gonna give you guys some really good techniques right now. I hope you guys are ready for this, okay? I'm gonna give you guys some really good techniques over here when trading the scanner source. Alrighty? So let's take a look. Okay, let's take a look. I hope you guys are ready. I hope you guys are ready. Alrighty? So it's why are you on the 30-minute, sometimes the 15-minute good? Manny, after you have entered, when it starts going, do you get out of the market? No. If you guys download my PDF, right? I have a PDF that you guys can download. You guys can go to my session. You guys can go to the Pip Talk. You guys can go to Telegram. You guys can go everywhere and download this PDF. So when you're trading with me or trading on your own, this is going to show you how to get to the session, how to get the updates of my trades on Pip Talk. I'm very active on Pip Talk. All the training that you need before you start trading. I have a whole 8-course bootcamp on Go Live that you guys can watch. You guys can watch our 3-core strategies. You guys can learn the 5 steps on how we trade, right? You guys can learn how we set our take profit and our stop loss. So we have a risk reward rule about how to set the TP and stop loss. But then most importantly, when you're using proper risk management, what we do is we have a 3-step trade management. And the 3-step trade management is going to keep you guys into the game. So number 1, the first thing that I let people know is that you never let a winner turn into a loser. Okay? I got to slow down because my energy and anxiety is getting high. So we never let a winner turn into a loser. So you see the beautiful part about the scanner source that the scanner source is going to get you right into profits. But it does not mean that the market's going to instantly go 100 pips in your favor. Sometimes the market turns around on you. Sometimes it does that. So trade management rule number 1 is that you never let a winner turn into a loser. When the trade goes into profits, this is where you can change your stop loss to your entry, and now you have a risk-free trade. So now you are at 0 risk and at 0 liability in the market once the market's in 10 pips profit. Step 2 is we teach people how to take partial profits. If you're 20, 30, 40 pips in profits, we teach you guys how to take partial profits by reducing your lot size, putting half of those profits into your account and keeping your original entry. And then step 3 is trailing your stops. So once the market is going in your favor, now you can start adjusting your stop loss and putting your stop loss in the direction that your market is going. So that way you can continue to secure profits. This 3-step trade management, is going to change the game. And this is all available on Go Live. So again, you guys can come here, come to the recorded sessions. I actually forgot it. I forgot to favorite. I'm so sorry, right? Just come right down here to favorites, right over here. Let's refresh this. Come right down to favorites and then watch our trade management videos. Okay? Watch our trade management videos over here. Trade management part 1 and trade management part 2. It's going to teach you all about how to manage your trades and how to compound your account. So all those answers that you look for, all those gray areas, we have it here thoroughly, meticulously, and in order for you guys to check out. Okay? So make sure that you guys come here to check it out. Now, let's get to the good stuff. Let's talk about some advanced tips and tricks when using the scanner source. Ready? So here we go. So advanced or pro tip, or we're going to call this pro tips and tricks using the scanner source. Okay? Now, when I say pro tips and tricks, this means that only a real trader who knows what they're doing is going to be able to follow along. But let's talk about some of these pro tips and tricks. One, right, is analyze ANALYZE, analyze on a higher time frame, right, and enter on a smaller time frame. Okay, that's pro tip trick number one. Okay, so what do I mean by that? Okay, I mean, let's take a look at Euro odd, right? Let's look at Euro odd on the 1 hour or the 4 hour, right? It's going to start off with simple pro tips and tricks, and then we're going to get into better ones, okay? Look at Euro odd on a 4 hour time frame. On a 4 hour time frame, we can see that Euro odd came right back over here to this wick rejection level. Look at all this wick rejection over here. There's a lot of wick rejection right over there. We call this a resistance, right? So on a higher time frame, on a 4 hour or on a 1 hour, we're assuming or we're creating an analysis that the market's going to go in our direction. So analyze, look for an analysis on a higher time frame, like a 4 hour or a 1 hour. Okay? So let's do this. Analyze on a higher time frame, 4 hour / 1 hour, right? And enter, ready, on smaller time frame, like the 15 minute, okay, the 15 minute and the 5 minute, okay? Boom. So if I'm looking at this on the 1 and 4 hour as a sell opportunity, I'm then going to jump down to the 15 minute and or the 5 minute to be able to find my confirmation candle. Okay? Now, pro tip trick number 2, okay, is use MTFA. Use what's known as multi-time frame. Oh my goodness, FRAME. Use multi-time frame analysis. Okay? AKA, some people call this market synchronization. Okay? You might be like, Manny, what the hell does that mean? That sounds super duper complicated. It's not. Multi-time frame analysis, or AKA market synchronization. What do I mean by that? I mean that if you want to enter on this trade, right, make sure that the confirmation candle is on the 15 minute plus the 5 minute at the same time. That's all that means, okay? Look for the confirmation candle, right? We're going to put that over here as your second trip. Look for confirmation candle on the 15 minute and the 5 minute time frame at the same exact time. What do I mean, right? This is what I mean. So let's say I use the 4 hour. This is going to get so good. This is going to, when I say that this is going to help you guys, like, you guys have no idea. So I looked for a support or resistance on the 1 hour or the 5 or the 1 hour, the 4 hour. Same thing I would do on the scanner. Second thing that I'm doing is I'm now coming down to the 15 minute to be able to enter the market. So on the 15 minute, the first thing that I'm looking for is I'm looking for a confirmation candle on the 15 minute. So as an example, here goes the red confirmation candle, right? Here goes the confirmation candle. So we see we have a red flat top closing below the 4 on the 15 minutes. So you see how I highlighted that candle? I do that for a reason. Because Now what you could do is you can now jump down to the 5-minute, right? You could jump down into the 5-minute time frame, and in the 5-minute time frame, you want to look for the very same thing, right? So here goes 5, 10, 15, right? Here goes the 3 bars. Where is it? 5, 10, 15. Here goes the 3 bars in that 15-minute time frame. So in that 15-minute time frame, I'm now coming down to the 5-minute, and I'm re-looking for, actually, you know what? Let's go back to the 15-minute. Let's do this. 15-minute time frame. Let's draw down that vertical line one more time. Remember, this is going to help you with any strategy, not just Forex Harmonics. There goes the 15-minute. Now, I'm going to drop down to the 5-minute, and when I drop down to the 5-minute over here, okay, if this was the close of the 15-minute time frame, here is the 5-minute candle. So you see we have 2 different candles now that we can look to enter. We have this confirmation candle, and we have this confirmation candle. Okay? Look for the confirmation candle on both time frames. So if I begin to open up my setting, look what I have over here. I have the sellers in control, and I have the sellers in control above the DMI above the 40. Let's set up the DMI, the coordinates, above the 40. So look at that. You can see that this market was above the DMI over here on this candle. From this candle to this candle right here, it was all above the 40. So this gave me 3 different candles, 5, 10, 15. It gave me 3 different candles to enter. So you're going to notice sometimes that the markets, in this example, they added up. But in some examples, they won't add up. So you just want to make sure that if you see it on the 15-minute, drop down to the 5-minute time frame, and then look for the entry on the 5-minute. Just within that 15-minute candle, drop down to the 5-minute and look for the confirmation. Look for the confirmation candle there is basically what I'm trying to say. Very, very simple, right? Now, what is the third thing that you guys can do? Okay? Here's the third thing that you guys can do. Okay? Here's the third thing, right? So the third thing that you guys can do, a third advanced entry technique with this, is enter within the entry candle zone only. Okay? Okay? So I'm going to show you what I mean. Close. I don't know how to say this. I'm just going to show it to you. Let's take a look, right? 3. Enter within the entry candle zone only. So let's take a look at this market. Let's look at these 5-minute candles. Okay? We're going to look at these 5-minute candles real quick. Okay, let's look at these 5-minute candles. Let's do this really quick. Let's watch this, okay? We're going to open up our settings. We're going to identify our entry candle right over here. Here goes our confirmation candle right over here, right? Well, on the 5-minute, let me see. The 5-minute was actually over here. So let's look at the 5-minute right over here. So this is what we're going to do, okay? So here goes the 5-minute. We're going to line this up. I want you guys to pay close attention, right? So you see all of our confirmations are in order. We have the red flat top closing above the 4, red bar on the awesome. The red is above the blue and the stotch. And then we also have the red above the blue with the sellers in control and the DMI. So everything is lined up on these indicators so we can get rid of them. Now, this is the confirmation candle. The next is the entry candle, okay? Next is the entry candle. So let's take a look. When this entry candle is here, what I want you guys to do is take a look at this. Let's look at this entry candle, right? From where this entry candle opens, I want you guys to pay attention because I'm going to reduce the time frame even more. Where this entry candle opens and where this entry candle closes, I want you to open up this whole entire zone right over here. Open up this entire zone. Sorry, I'm trying to move this out the way. Open up this entire zone over here. You see this entry? So look, I'm going to mark this up, right? This is your confirmation candle right over here, so that way nobody's lost. This red one is your confirmation candle. And now this blue one right over here. Okay, watch this. This blue one is your entry candle zone, is what we're going to call it. Is your entry candle zone. What do I mean by that? I mean that look at this candle. Look at the top of this candle. Okay? Watch this. I'm going to show you how to avoid a bad trade. And look at below this candle. Okay? Now you only, right? Let's do this. You only want to enter the market in this zone. Okay? So this, since this is a, what do you call it? Since this is a sell example, I'm going to give you sell example ideas, right? A candle, or we'll put it like this, don't enter the trade if a candle closes above the entry candle, and also don't enter the trade if a candle closes below the entry candle. Okay? So this means that this is a late trade, and then this means that it is a bad trade. So check this out. I'm going to drop this down to the 3 minute. Let's drop this down to the 1 minute. Let's drop this down to the 1 minute, and then let's look at all of these different candles inside of this zone. This entire zone is your entry candle. So if you're, let's say you found the entry on the scanner and you want to enter the market, once you highlight your entry candle, okay, once the entry candle closes, what happens is that with the Hikinashi candle, remember the Hikinashi candle opens up at 50% of the previous candle. So what ends up happening is I'm going to come to the regular candles so I can show you guys, right? What ends up happening is sometimes the candles in this zone pull back, okay? The candles in this zone pull back. So when you're looking at these candles, you can enter the trade on any of the candles in the entry zone. 1, 2, 3, 4, the pullback, 5, 6, 7, right? You can enter any of these candles, but if a candle, okay, if a candle closes, let's make this green, okay? If a candle closes above the entry candle, you do not take that trade. That is a bad trade. That means that that this is not a good momentum-based trade. This means that this market is most likely going to start going in the opposite direction, okay? And 2, you do not enter a trade if it already closed below the entry candle zone, because now you're late, okay? Now you're late. And what can end up happening is that the market can go a little bit in your direction, but if the market needs to pull back, if it pulls back and it keeps going, then you just caught a bad entry. The beautiful thing about the scanner source is that if you get into the market and it keeps going in your direction, then you are a happy camper, right? You are a happy camper, right? You are a super happy camper, and you're making all of those profits. That's 32 pips profits right there instantly on Euro odd. But what you don't want to happen is you don't want Euro odd to turn around against you when you're over there. And if you're following the risk management techniques, then you'll never have to lose the trade. The trade will go in your direction. You can immediately kill your risk, by moving your stop loss to your entry, and then you're risk-free in the market. But if you get into the trade late and then the market goes against you, then you're going to end up closing with a loss, even if it's a little loss. I want you guys to have no losses. Okay? So enter the candle within the entry zone. So let me show you on the harmonic scanner. Right? So let's take a look at NZD CAD over here. So let's say we're looking at NZD CAD. You ready? Let's say we're looking at NZD CAD. So we're looking for the confirmation candle. Right? This is the 30-minute on NZD CAD. We see the confirmation candles over here. We come down to the 15-minute. Right? We come down to the 15-minute. Right? So here goes our candles right over here for the 15-minute. We look for our confirmations right here in the market. Okay, boom. We have our confirmations right there in the market. Now what we do is we take that entry candle right over there, just like this. You see this? And then we drag that entry candle out to the right. Okay? We drag that entry candle. Oh, I'm so sorry. That was the confirmation candle. Here goes the entry candle. Okay? Boom. We take that entry candle. So this was the confirmation candle where everything lined up. Remember, you do not enter the trade on the confirmation candle. That confirmation candle is what gives you, like, this is where I want to enter. The confirmation candle must close. When the confirmation candle closes, you get to enter the market on the entry candle. Look at the entry candle. You see this? So look at this entire market. This is a perfect example right over here. Look at this. This is a perfect example. So this would have been some drawdown. You might have gotten into this trade and you could have caught 20 pips on that wick, but then let's say that the trade came back against you. And now you're in the market and you're all up here and you're all upset because the market's floating at your entry. How do you know if this market is still going to go in your favor? Exit the market if you're looking at it. Only exit the market if a candle closes above the entry. You see how this market stood sideways in this whole zone? There's nothing to fear. It's all good. It's all good that it's right here in this zone. It does not matter that's in this zone. All these candles are closing in the entry zone or below the entry zone. You do not take the trade if it closes above the entry candle. If the market closes anywhere up here, you do not take the trade. If it closes, or if you're trying to take the trade anywhere outside, you do not take the trade, right? That is a warning that you're in the trade late. You only get in the trade in the entry zone. Because by doing that, you know that the momentum is still in your favor. And if you trust the analysis, you trust the entry, and you held it, look what would have happened. Boom. That would have been 50 pips for you right there in the market, right? So you only enter the trade if it's within the entry candle zone. Does that make sense to everybody, right? I have more tips for you guys. Okay? Somebody asked, so if the confirmation candle has to close, yes, the confirmation candle has to close with no wick using the Hikinashis. Correct. Because that shows the strength of the market. That shows the strength of the candle. Yes, this would have hit stop loss at entry, but you would have had the option to re-enter. And that's what's going to bring me to the next advanced tip. So let's come back over here. What is the next advanced tip? You guys are going to love this. Watch this, right? Guys, this is going to blow your mind. Once you guys really know what I'm talking about over here, trust me, you're going to be able to enter the market like a pro. I will never understand why people would constantly try to reinvent the wheel. And you know what it is? For me, it's ego. I think that people like to find their own lane. I'm going to call it what it is. I'm going to call people on their BS. I believe that traders have the biggest ego in the world. And what they do is they do not want to say that they learned something from another educator. They don't want to say that they learned something from another trader. They don't want to say that they learned something from their upline. Because they feel like it devalues what they offer as a leader. Everybody wants to be unique. Everybody wants to have that special something. And then you know what ends up happening? They reinvent the wheel again and again and again and again. And then thousands, if not hundreds of thousands, if not millions of traders around the world begin to follow people who have no real results. And then they adopt that same ideology and then they reinvent the wheel. And then none of them have results. And then the actual educators that are actually making thousands of dollars every single day, they're not following them because they're cutting them off from the source. They're like, well, this is making you thousands, but I want to take what I learned from you and then I want to do this. And then I'm not making no real money, but I'm going to be known and my clout is going to be up there. And then everybody else is following Joe Schmo. Joe Schmo has no results, and then those traders get no results. And then they say, IM Academy doesn't work. I learned from my mentor. I'm just blowing accounts. Why you think? Learn from the source. Learn from the few people that know what they're doing. That's really living the life. That is really making the money. You will know. You will know. Stop learning from people. Stop letting people who are still trading out of their bedroom in their mama's house tell you how to make money. What? Why are you even on their session? Why? That makes no sense. Makes zero sense. You see, what I do is I get valuable information and I package it and I redistribute it. I don't reinvent the wheel. I learned from Chris Terry. And I've taken techniques from other educators that are actually making money. Right? 5 years of my backbone and trial and error went into this market learning this right here. And this right here single-handedly changed trading for me. Single-handedly. It's one thing. And I'm right here giving it to you. And I can promise you, don't let this go over your head. This entry technique, if you are trading harmonics or not, if you are trading any other strategy, I can promise you, if you adopt this entry technique, and you follow our 3 steps to risk management, never let a winner turn into a loser, taking partials and trailing your stops, and you're trading with proper risk management, compounding, I can promise you that all the results that you ever wanted, you're going to have. You're going to have. Okay? So don't let this go over your head. This right here is fire. This is years in the making. Years. You guys are going to love it. All righty? Let's get back to it real quickly. Okay? Because I'm doing it. Now, enter within the entry zone only. Now, step 4, advanced technique number 4. Okay? Advanced technique number 4. Okay? The break and retest. Okay? Plus the scanner source gives you another entry in the market. Oh, man. Oh, man. Watch this. Are you ready? Are you ready? Are you ready? Check it out. Let's say I'm using this example. I'm going to go to the scanner because I want to show you how this all works on the scanner. Let's come back to the Hikinashi candles, right? Come back to the Hikinashi. I'm on the 1 minute. Let's come back to the 5 because we was on the 5, right? You can enter on the 1, you can enter on the 3. Trust me, it works in all time frames. I would recommend the 5 or more. Let's take a look at the zone, right? Let's look at this zone. I'm going to show you on the scanner too, but look at the zone. Ready? Look at the zone. Here's your entry candle. Look on the 5-minute. Look at how your entry candle on the 5-minute was also a support and resistance zone right over here. Watch this. The market broke out. Look at this. The market broke out, retested. Boom, the entry zone. Market's getting ready to come back down. Broke and retest structure. So if you missed the first entry over here, we're going to do a break and retest, and then we're going to look for the entry all over again. Boom, you're looking for the 4 to close, right? We need it above the 40. So here it is. Here goes your confirmation candle right over there. Red bar, red above, everything's in control. There goes your red. Here goes your entry candle. Boom. Look at this. Look at this. Ready? Watch. I'm going to show you on the scanner, but I want to show you how these rules work. Look at the direction the market ended up going. Watch. Watch. Let's say you wanted to re-enter the market. Watch this. That's why I said I'm going to come over to the scanner. Watch this. There goes your second entry. There goes the confirmation. Here goes the entry candle. Remember the entry. You do not enter the trade. Okay, you do not enter the trade if it closes below, and you do not enter the trade if it closes above. Okay? Let's come down over here. You could have entered anywhere in this zone. How big is this zone? This is a 8 to 10 pip zone. Now, if you come down to the 1 minute and you entered, look at where your actual confirmation and entry is. Your actual confirmation and your entry is right over here. So this would have gave you a solid, let me see. If you was looking at the market, this would have gave you a solid 17 pips of coverage before you would have ended up exiting this trade. Okay? 17 pips of coverage right over there before you exited the trade. But now let's say you got into the trade late and you're in this market, right? You missed the initial entry. This is a bad trade, but you have to see the bad trades, right? Boom. You missed the initial entry. You're trying to get into a second entry right down here. And then I'm going to show you a good example, right? You had 17 pips of coverage, and now you're still within this entry candle zone, right? Once this market went back against you, it would have knocked you out the trade. But you see here how the market is closing outside of this zone? We don't enter. Let's come back to the 5. We don't enter. We only enter. So if you took a shot and you know what, it was a bad trade, okay, it was a bad trade. So what? It was a bad trade. But look at how the market is closing above the 4. Pardon me, how it's closing above the entry zone. This is a no-go. This right here lets you know, like, this is not a good trade. These candles are reclosing above the entry. That's not a good trade. Even though it went back into the entry zone, you can't trade it. It's already telling you that that momentum is broken. And look at how the market is continuously going in the wrong direction. See that? Very important. Now, let me show you on the Harmonic scanner what happens. Let me show you how to trade this on the Harmonic scanner. Ready? The thing with the Harmonic scanner is that you have coverage. So let's look at this example in NZD CAD right over here. This is the there we go, 15 minutes. Look at the entry, okay? So if you entered on NZD CAD, boom, you would have caught some pips. But what I want you guys to look for, let's remove the drawing tools. Oops, I need that scan to come back up for NZD CAD. There we go. Okay? What I want you guys to do is let's come back to the 15-minute, and you could do this on all of the trades on the scanner. Take a look. When you're on the scanner and then the market leaves the entry, right? Here's the entry, the market came down. The market is going to end up creating structure levels in the market. You see that structure level right over there? Look at that structure level. Look at how the market created this support, created the support, and then you have a break and retest. You see that? That break and retest right there is where you can look for the next entry with the scanner source. So boom, these are the good examples. We have a break and retest. The market broke out, retested, and now as it's turning over, I want to show you guys more examples. Look for right over there. Confirmation candle, red flat top closing below the 4, and then you just look for the rest of your confirmations. Look, you have the sellers in control, DMI over 40, red bars. It would have actually been this one. We have the Stotch crossing, red bars, and then you also have DMI in control over here, and bingo. Look what you get. You get a whole second entry in the market. There goes your confirmation candle. Here goes your entry candle. There goes your entire zone. And you can enter 1, 2 candles in that area. You would have had 30 extra minutes to enter that trade. The market starts closing on the outside. You don't enter, but good sign, the market goes in our direction. Boom, another 30 pips. Let's take a look at some more examples. Let's look at GBP/NZD. Okay, GBP/NZD, it doesn't actually have any structure over here. GBP doesn't have any structure. The only structure is kind of like this structure. Let's see if I can come down to the 15. This is the structure on GN. Let's drop this down to the 15. Okay, here's the structure on GN. GN goes into massive, massive profit. Bingo, all those profits, right? GN pulls down, creates a support, and bingo. Let's take a look. See what GN does? Goes up, pulls back, creates a support. It leaves the support and comes right back to the support. Let's look at that support. Is that support at a previous support zone? Yes, it is. Look at that structure right over there in the market. So what do? We look at the structure. We wait for the market to come back to the structure, and then now we wait for a second confirmation in the market. Okay, we wait for a second confirmation. Now look, this didn't give us any confirmation on the DMI. Nothing there was really, really, really ready for us. Okay? Until over here. This is when the DMI started going control, but then the Stotch was a little bit messed up. So this is very hard to enter. You would have needed to enter this on the 15-minute. But if you did find this entry, which we're not going to say we did, but if you did find this entry, that would have been another trade. Let's try EG. Here goes another great example on EG. Look at the structure point on EG. On EG, the market made a structure. Look at the structure on EG. Okay? Look at the structure on EG. We had the breakout, and there goes the retest on the structure of EG. And look what happens. The market goes above EG, and then now we're looking for our confirmation candles. And right over here, let's see. This was the confirmation right over here. Once you get used to this, you're going to be able to see when all the indicators line up. Buyers in control, sellers above, blue candle, blue candle, blue confirmation candle right over there. There goes your confirmation candle. The close of that candle, and then here goes your entry candle right over here. There goes your entry candle and zone. There goes your next entry. And then that would have gave you more pips right over there in the market. Bingo. That would have been another 50 pips. You guys see how that works? You guys see how we're using structure in the market? The rest of these did not develop enough to give us a break and retest, right? This one is just now giving us structure right over here. This one is just now giving us structure, but we have no buyers in control. Look at that. Never went above the 40, so no entry. All right? But once you guys get this, boom, you guys are going to be in a world of fun. So this is another way that you can use. Let's come back over here because we're going to get ready to wrap this up. But these are not, this is more advanced entry techniques that you can use. So the break and retest of certain zones, the break and retest, use the scanner source to get you another entry. Don't just enter late. Let the market recover, find the scanner source at the retest and enter, right? Now, the last tip that I'm going to give you guys is the break and retest, okay? The break and retest with the DC channel. I don't know how to pronounce this, but I don't want to stay here too much long because we've been here almost 2 hours. But I'm going to show you this. The break and retest of the DC channel. Okay, how do I say this? Okay, the break and the retest of the DC channel on different time frames. So this is what I'm going to show you over here. Let's look at the DC channel. Ready? Let's remove all these drawings. I'm going to show you guys something over here. Okay, let's say, let's just come back to the scanner. And let's come to the 1 hour chart. Let's come to the 1 hour chart and look for a trade that already like made a move. Okay, here. All right. Let's say we use this, okay? Let's look at NZDJPY, right? Let's say you want to enter, not over here. Let's look at the market, okay? Let's say this was the entry. Boom. The market pulled down, hit TP2. You would have looked for the scanner source somewhere over here, and you got in the trade. Let's say that would have been 50 pips. But then let's say the market started pulling back, right? Now the market is pulling back, and you're looking for the market to pull back to a structure level right over here, okay? You're looking for the market to pull back to the structure level right over here, okay? What you're going to do is if you're looking at the pullback on a 1 hour time frame, you can reduce it to a lower time frame to the 15-minute and then look at the DC channel. You see how it's now at the red for the DC channel? Did you see that? Look, the 1 hour, all it was doing on the 1 hour over here was pulling back right here. Okay? Look at this. See how it pulled back? Right over here. This was your entry area, right over here. It pulled back. So you're looking at the market, right? You see the market came out. It's pulling back. It's not at the red channel. It's pulling back. It's looking like it's a buy. You're like, all right, this trade is done for. What do? You drop down to a lower time frame on the 15-minute, and then you reanalyze it. And look, guys, I don't know if this makes sense to you guys or if only making sense to advanced traders. Look at the structure level. Look at the support and the resistance. Look at how the market came back, and now it's at the red DC channel. And now when you're here, you could try to look for the scanner source all over again. Now, this didn't give us a really good entry because you would need this on the 5-minute. But if you found the entry over here, this would have been a whole nother 20, 30 pips for you guys right over there. That would have been a whole nother 20, 30 pips. Or even if you waited for the market to come back all the way over here. And you came back over here. And then over here, you're waiting for the market to go in your favor. Okay? Let's look for the DC channel to come in our favor. I like to do this on the 5-minute to get in even earlier. Remember, multi-time frame analysis, but let's say we're just using the 15. Here would have been your confirmation candle. You wait for that confirmation candle to close, right? You get in on the entry candle right over there. Take a look. There goes your confirmation candle. All right? And look, this would have brought you more pips in the market. That would have brought you more pips. You would have had 1, 2, 3, 4 different candles to enter. And if you entered, that would have been another 15, 20, fold back, another 20, 40. Let's say you were just holding and swinging the trade. Look at how the market keeps going down. And it will do it again and again and again. So look, market makes another structure point right over there. Market breaks, retest, look at that on the 15-minute. Get down and dirty. Get deeper and deeper and deeper. If this goes down to a 5-minute, and then that's at the red DC channel, look for the scanner source again, and then you could have found another trade again. I am literally teaching you guys how to take the harmonic scanner right over here, because we're going to wrap this up. I literally am teaching you guys how to look at the harmonic scanner, so find the setup, throw some support and resistance to make sure it's at a buy or sell zone, use the scanner source to find the entry, and then once you find the entry, you get to jump into that market, get into the trade. It's going to break and retest. You drop the time frame down to the DC. You get in again. You breaks and retest, drop the time frame, jumps to the DC, and then you could take one trade and get into it again and again and again and again and again and again, and you could turn one trade into multiple trades with an entry technique that's going to push you right into profit. That's going to keep you covered, family. Oof. I know I got deep, and I know I probably lost a couple of people along this way, but I got to tell you, this right here, major, 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 major. So with that being said, I'm going to get ready to wrap this up. Man, I hope that you guys really found a lot of value. I try to start simple, and then I try to go deep for you guys. I know people don't like the deepness. They shy away from the deepness. But you know what? The best traders and the best educators, you know what they have in the back of their mind? They have that depth in the back of their mind. They're showing you the easy stuff, but in the back of their mind, they have all of this stuff hardwired in the back of their mind, and that's how they're saying, yo, this is a good trade. And that's why sometimes when you follow an educator, the educator has better results than you. You're doing the same strategy, but then the educator has better results, and you're like, why? Why am I trading the same strategy that's making him getting all these TPs, but I keep getting stop loss? You know why? Because they have a depth in understanding that they might not be teaching you, that they might not be showing you, or that you might be unaware of. I am not afraid to be that educator to come here and say, listen, get out of that easy mindset. Easy peasy ain't not going to make you rich. You need to get in the trenches, baby. You need to put that elbow grease in. You need to learn. Don't be afraid. It's a lot of work. So what? You know what? It's a lot of work. Working a job for the next 40, 50 years of your life, having somebody yell and scream at you, treating you like a dog. Men, you know what's hard? Asking your wife to come home and respect you when another man is telling her what to do at the job, treating her like SHIT. And then you have the audacity to try to be the man at the house. You know what? She has a man in her life. You know who that man is? Her boss. Because that boss is paying her bills, not you. Let's face it, gentlemen. Let's face it. So, fellas, you want to be independent. Gentlemen, right? You want to be the real king in your home? You want to be the king in that castle? You want to put your wife on that pedestal? It was my wife's birthday. Guess what I just did for her? I just bought her a Tory Burch bag and a $16,000 necklace. You know why? Because I felt like it. Because I felt like it. No enticement. Forgive me, I am. Because I felt like it. Because she deserved it. Because I'm the king in her life, not the boss. So, don't be afraid of the trench work. It's hard, so what? Working at a job is harder. Having somebody else to tell your wife, your children what to do is harder. That's a blow to your ego. Learn how to trade. Learn how to trade. Get that intuition. I'm not afraid to be that educator in your life. I'm not afraid to give you that source. And if you know what, if you shy away, go ahead, shy away. Go make that easy money. Go copy and paste somewhere else. But come home. There's a reason why 500,000 people around the world has been through my education. There's a reason why there are a dozen educators in the company now because of the education that we put out. Not because I invented it, because I was humble enough to take the education from our CEO and take the education from other great predecessors and then put it forth. And God used me as a tool. God used me as a vessel. I do God's bidding all day. This ain't me. I'm doing God's work. I'm humble. I got no problems having mentors and uplines. I got no problem giving it away. Do you ever see me say, yo, I never used the DMI. Where did I get the DMI from? I got the DMI from Delano. Everything else I got from Chris. Let's keep it 100. So where does the praise go to? To Chris, to God, and to Delano for introducing me to the DMI. Got no problem saying it. And I'm giving it to you. And look at this amazing work. Look at this amazing work. Okay? So one last time before we wrap it up, family. Again, you guys can come over to my channel. Check out my boot camp. And if you guys are not a part of it, you guys can look us up at Forex Harmonics. Feel free to check us out on Pip Talk. I'm going to show you guys how to get real deep and dirty in the market. All right? Just go to your im.sensor. All right? Once you sign into im.sensor, or when you download the IM Academy app, family, just come right over here to, not Pip Talk, pardon me. Come right over here, not go live. Oh my goodness, I'm bugging. Let's come back one more time. Come right here to Pip Talk. Come to Pip Talk, look for FRX Harmonics, or look for my channel, Manny Q. If you look at my channel, you're going to see a couple of pinned posts. You guys can come over here, and right over here, you guys can find out how to download my PDF, how to get access to my sessions. You guys will get this PDF. You guys can download this PDF, share it with anybody on your team. And by doing that, this PDF is going to show you the scanner. It's going to show you how to access us. And everything is clickable. If you click the PDF, you see it's going to actually take you to the links. So everything is clickable. They don't need to go to a million websites. It's one PDF. Everything is here. They can do it from their phone. It'll show you the time frames, the times that I start the sessions. It will show you how to access Pip Talk to stay up to date with your trade, because I throw out trade ideas every day. It will give you our 8-course beginner boot camp. Again, all you guys got to do is click on it, and you'll go right to the pre-recording on Go Live, right? And this boot camp is going to give you and your team the foundation that you need to understand the market. Then it's going to give you our 3 core strategies: triple fire divergence, the scanner source that I just taught you, and then also our blackjack strategy. Okay? And then you're going to learn all about trade management. These trade management is going to take you and your team through this entire PDF, how to follow us on Go Live, how to set up the trades on your own, how to set the risk to reward, how to use risk management, how to compound your account, and then how to properly manage your trades. And then it's going to show you how to get connected with us in our Facebook community, FRX Harmonics. It's going to show you guys how to get more resources, because we have more strategies, more training, more understanding, and then it's going to show you guys how to get connected with me. So once again, guys, I'm going to get ready to wrap it up. Don't forget to show Chris Terry love. And family, feel free. I am Manny Q. You guys can also come right over here to my Instagram, and if I've shown you any love, don't be offended if I don't write you back. I don't write nobody back, because I don't want to get caught up with cross-recruitment or any chairman. I literally don't write anybody back. So if you write me and I don't write you back, don't take it personal. But if you want to show some appreciation, feel free to tag me on Instagram. I will repost you, and that's my way. So that's it, family. I love you guys. I appreciate you guys. Thank you so much for tuning in to this special edition of Market Mastery with Manny Q. I'm going to see you guys on our very next training session on Tuesday. So come join us from New York. Come catch some pips and come change your life. Everyone, have a great day.